Hello student, welcome back to IBS. Today we are going to discuss about income statement overview part 2. So let's jump to the topic and understand it one by one. We have already discussed a lot of things with regard to income statement, like what is their structure and what kind of a standard we follow, what kind of entry we post monthly basis, and what are the things which is required to create income statement or finalize income statement. Let's jump and understand a little bit more with regard to income statement. This one we have already covered. Now we will understand two things with regard to operating income, their meaning, kind of stuff. First of all, we learn about the definition. Profit of a company from his core business. Core business is their main business. Maybe if you are FMCG, your main business is what you are generating through a store, and if you are a construction company, your main business is generating from the sale of the flat or property or store or whatever it is. If you are in medical, so your main earning would be from your hospital, either through bed or through patient kind of stuff. So these are the main earning, or we can say core business operation. It includes revenue and expenses directly related to core business. This revenue is normally from their core business. If you have any other income or something, that kind of income here. Income and gain or loss from operating, from either discontinue, if you are discontinuing particular branch or anything, you are selling their asset and other investment, so you might get some cash or you might get some money, or whatever the value of that asset. Maybe your value of asset was 10 million in particular branch you have invested, but when you are selling it you are getting 8 million, so you will book 2 million as a loss, or that too net of income tax. I mean to say, income tax has to be deducted, and then that income tax will be added here, either plus or minus based on the situation, because we have already calculated the tax this side and we have reduced the tax. We can see this. So after, when we have already finalized our tax in that from main businesses, then from other businesses, if you are getting any gain or any loss, you can adjust from your main tax. If you have any loss, you can reduce this tax. If you are getting any gain, then you will have to add the tax over here. So similarly, disposal or for discontinue, if you are selling something, then that also you can consider. This is with regard to operation, your business operation you are discontinuing, from there you are getting loss or something. This one with regard to disposal, when you are closing your operation, maybe you will have some asset that also you will dispose of, or also maybe your asset is not usable or not sellable, so you are going to dispose of. For that you have to bear some kind of cost, so that will come here, and that too again net of tax. Tax will be adjusted from here. I hope it is clear to you. What are the things which are excluded? Financial income, interest and dividend from your operating income. Till here he is talking about. Before that we will not consider interest income or dividend, even interest expense, financial expenses. There is nothing but interest expense and non-operating gain and loss. Non-operating gain and loss, and also these kind of item, tax, extraordinary, all these things will be excluded from the operating income. So when we are saying operating income, what does it mean? Operating income is simply revenue minus cost of good minus selling and administrative related, your marketing and selling cost and depreciation. That is your operating income. If you exclude this depreciation income from operating, then it will become your earning before interest, tax and depreciation and amortization. That is nothing but EBITDA. EBITDA is very much useful in financial modeling. Now we have income from continuing operation. Now he is talking about this point, earning before tax. Just before tax, we have considered all our expenses other than tax. Before that, whatever your amount is coming, that is your hardcore earning without considering tax. After tax, it is your net income from your main business. And after that, if you have, normally there is nothing most of the time. This part also normally there is nothing. If there is, there may be minimum amount, but in case you sold the operation or you dispose of any of the business, then there will be huge amount will normally comes. But in general, there is nothing. This is your basically your main income or income from your main business or core business. So income from continuing operation definition is overall profit loss ongoing operation, as I said, including your core business and financial interest and income. So this what they are trying to say, this is our core income. Then they are saying if you have invested somewhere or you have taken any debt or something, for that you have to bear your loan kind of expenses, and you have invested some of the amount of some different company or something, from where if you are getting any dividend and you have deposited your fund into bank as an FD or something, you are getting interest kind of stuff, so those things will come here. So that is why overall profit from ongoing operation this one, and including other core business and financial income expense and non-operating item. If there is non-operating item, if there is anything loss, gain or loss, that will also be part of your continuing operation. What is included, what is excluded? Included, you can see these are the thing will be included and these are the thing will be excluded. So this is what I'm trying to say. Now we have key point, income from continuing operation. So what they are trying to say, this one will be reported only when you have anything as a discontinued operation or something. Otherwise, you can make your income statement simple. If you don't have this kind of item, you can close your income statement from here also. Income before extraordinary item is included if there are extraordinary item. If this is there, then you include. Otherwise, you don't need to include. You can remove this kind of item, and you can close your net income here also. If there is nothing, there is no point of keeping all this line item. This is what the point here is. So basically, they are trying to say, if you are preparing your income statement in that way, so you will be able to know what are your earning through your core business and what are your earning from disposal and other closing your business kind of stuff. So those also will come into your income statement. And one more thing with regard to single step income statement, in which you will have your revenue and on your total expense will come, and then you will get your net profit. This is the simplest income statement, but this is normally not in use. So this is the basically method which is being used by all the country, entire world, follow the same kind of income statement. There may be little bit of changes based on the requirement of accounting standard. So I'm done for the day. We'll see you into the next session. Stay tuned. Thank you very much.